Hello, everybody. Welcome back to the Running Real Estate Podcast, and we are in for another great experience here today. We have a guest with us that I'm very excited to introduce to all of you. Somebody who I've known probably for the last 15 years or so, maybe actually a little bit further than that, possibly. Somebody who's been a huge influence in my life, my family's life. He's coached my my son in lacrosse. His wife is helping to teach my youngest daughter. There's a lot of connections. He's a neighbor. But first and foremost, the reason I wanted to have him on this, or one of the main reasons I wanted to have him on this podcast, is because he has great expertise when it comes to finances. So today I'm excited to introduce everybody to Chris Hoen, who owns Ameriprise Financial here in Berlin. And I'll stop rambling, Chris. So thanks for joining us.
Well, thanks for having me very much, Ryan. I appreciate it. And, I was thinking, not to jump ahead, but I was thinking, watching the Decatur Worcester lacrosse game this year, but also last year, there were 14 kids on the field that I had coached. And of course, Tanner was out there. And
right.
It was just a neat feeling to see kids that you had coached when they were 9 and 10 years old, excelling at the high school level. So, but thanks for having me. I appreciate the invitation. Yeah,
no, it's my pleasure. And yeah, you've influenced so many of those kids that have gone on to amazing careers in lacrosse. And they're all getting to that pinnacle right now where, juniors, seniors, getting ready to take it to the next level. So it's pretty exciting.
Yeah, I know a handful that I think are planning on playing in college, and certainly there are some that are certainly talented enough to do so. So we'll see how it works out for them.
Yeah, well, it started with you way back when.
I don't know about that.
The Worcester County fields.
Yeah.
But we can go so many different directions with this. But I want to first start off, and this is an important piece here. This building that we are in, if it was not for Chris, we would not be here. When my wife, Christy, and we started looking for a spot to have another real estate office on Main Street here in Berlin, I went to Chris, and Chris was so kind to give me a couple connections and was bird dogging for us and truly helped us land this location. So thank you.
Sure. And this is actually the first time I've been in here since you got in here about a year and a half ago or so. And it's a really neat space, and congratulations on your expansion.
Yeah, no, thank you. We're it's a work in progress. We're continuing to try to make it evolve, but we love being here in Berlin. Great town.
It's changed quite a bit since I grew up. Growing up in Ocean City and going to school here in Berlin, Main Street is quite a bit different than it was in the 1980s. That's for sure. Right.
So that's where I was going to go next. I mean, just kind of giving everybody, our listeners here, a little bit of history on Chris, and obviously you said you grew up here, so maybe tell us a little bit more.
Sure. So my family moved to Ocean City. 1979, I think, 1980. I was in third grade, whatever year that was, and my father was a builder. I went to Ocean City Elementary School until finished fifth grade there, and then went to what was then Worcester Country School, now Worcester Prep, and graduated from there in 1990, which is a long time ago when you think about it. But after that, I went to college in a small town called Lynchburg, Virginia, Lynchburg College, and moved back here, spent some time in Annapolis getting my career up and running, but moved back here with my family shortly before my daughter was born in 2004. And as we were talking about earlier, my first office when I moved back was directly across the street,
right.
Number 9 South Main Street, which is directly across the street from your office here in Berlin.
So full circle today. Right?
It is, yeah.
Right about the time that Caitlin was born, and now you've got big changes coming there too, right?
Yeah, the funny thing is we settled, had a house built, and we actually told them that we needed to be in before Thanksgiving, because that was her due date. She was actually due on the 23rd of November. That's the day we settled on the new house.
Oh, wow.
And so she was late. She was a week late, so that gave us a little bit of time to try to get things settled. And but yeah, it was 18 years ago. It'll be 19 years in November. And of course, now she's graduating in 3 days on Friday, and we'll be heading to school in the fall.
It's awesome. And playing lacrosse.
She is. She's going to the University of Mary Washington, which is in Fredericksburg, Virginia. It's about halfway between Richmond and D.C., and she will be playing lacrosse for the Eagles.
Nice.
Exciting. She's super excited. We're excited for her, and it's close enough. We'll be able to get to a few games, and they're in the same division or the same conference as Salisbury, so that'll be a game close by every couple of years, and they play some other schools that are within just a couple-hour drive. So
also play Lynchburg?
They do play Lynchburg, which is where I went, obviously,
right.
And they play St. Mary's in Maryland. They play Washington College. Typically, they're not guaranteed because those are non-conference games, but they typically, it's Division III lacrosse, and so lacrosse being a non-revenue sport, so to speak, travel costs are always a concern. So typically, they're trying to schedule games that they can get to down and back in the same day, right. On a bus, and avoid hotel costs and all that type of thing.
Yeah. Well, she's following your footsteps there and continuing to play some college lacrosse, which is pretty awesome.
Yeah, she's only been playing for 4 years, so it's she's really an athlete, and she didn't start lacrosse until 8th grade, and she was involved in lots of other sports. And a couple years ago, she just came to us. She said, "I decided I want to play lacrosse in college," and she kind of focused on that, and it's worked out. So very, very happy for her.
That case study has been talked about in my family a lot over the years. When you have kids who are athletes and they focus on sports and they get really into it for a period of time, especially at a young age, it's like, does that continue on, or do they burn out, or is it better to keep them very open and then they focus on something later, and really fall in love with it,
Yeah, I've seen it personally. Having coached so many kids, I've seen some that have stuck with it and really wanted to excel at the next level, and I've seen others that kind of the interest has fizzled out. I think from a recruiting standpoint, I can tell you that having conversations with college coaches, one of the things that they are very interested in is looking at and talking to kids that play multiple sports.
Right.
And there is so much crossover. I know you played hockey growing up, right? Mm-hmm. So hockey, basketball, lacrosse, all of those sports are very similar. They've got a lot of skill sets that cross over to each other. Hockey and lacrosse are kind of the only two sports where you can go behind the goal.
Right.
And but even just the experience is something that can translate pretty easily to the other sports as well.
Right. We are definitely going a different direction I thought we were going to go, but you're going to keep me going here because you talk about hockey and lacrosse, and I listened to this. It's not necessarily PG podcast, but it's called Spittin' Chicklets, and the idea is the hockey podcast, fighting losing teeth, Spittin' Chicklets, right? And there's a guy named Paul Bissonnette who's on there. He's on the TNT broadcast for hockey, and TNT has brought in Wayne Gretzky. So Wayne has been on here for the NHL playoffs on TNT, and it's funny, they were talking about how lacrosse and hockey go so hand in hand, and so many great hockey players were lacrosse players first, and Wayne Gretzky says the official sport of Canada is actually lacrosse,
right?
And so they asked him the other night, I guess in the broadcast, and he's like, Wayne, why you were so good at lacrosse, why did you stop playing? And he's like, well, it was too tough. I was getting beat up all the time. It's easier.
Hockey's pretty tough too.
Well, I think just trying to be those attackmen just getting whacked, in front of the goal and in the crease, so hockey was easier for him. So that was the direction he went.
That's funny. Canadian lacrosse it's obviously the same sport, but those guys are tough. It is very, very physical. We played a Canadian team a few years ago at a tournament when Tanner was still playing, and that was a very, very physical game, and some of the parents were saying, where's this coming from? I'm like, they're Canadian,
Right.
And the coach, the opposing coach from Canada heard me say that and just started chuckling. So they're known for playing a little bit of a tougher, and they play a lot of box indoor, obviously because of the weather, lacrosse, and it's obviously that's with the boards. It's a rough sport. So.
Right. Yeah. Well, now that we've gone through lacrosse,
sure.
Maybe we can circle back. So you obviously grew up in the area. You know the area very well. You know the economics of our area to some extent, and the businesses and the real estate. And then you went off to college. You spent some time in Annapolis, and
I did. So when I started my career as an advisor, well, I actually started as an intern. Like a lot of people do in any business. Shortly after college, I was an intern for what was then called American Express Financial Advisors. It's the same company today, but at the time we were owned by American Express. And we had one office in central Maryland, and it was in Linthicum, right near BWI Airport.
Right.
Shortly after I started, they announced a fairly aggressive expansion plan. They opened a couple other offices, one in Towson, one in Owings Mills, and one in Annapolis. And of course, being from the Eastern Shore, I wanted to be as close to quote unquote home as possible. And so I transferred to the Annapolis office as soon as it opened. And I think that was 1997, if I'm not mistaken. And so started out, obviously in your first year, you're always working with clients, and I did fairly well in my first year, and they asked me to begin helping train some of the new advisors that were coming in. And ultimately that culminated in a role as a district manager, which was a great opportunity for me to learn just overall leadership skills. American Express, obviously Fortune 500 company, tremendous resources, some of the best, absolute best training in the industry, not just in the financial services industry, but corporate America, so to speak. And the vice president, my boss at the time, left, and he had a lifelong dream of opening a vineyard, which he did do on the Eastern Shore in Queen Anne's County. And that led to an opening, and I ended up running the Annapolis office for about a year or a year and a half. And my wife and I, we had just gotten married, and we always knew that we wanted to raise our family here, back on the Eastern Shore, and get away from the kind of the hectic pace and the traffic. In Annapolis, I lived 3 miles from the office, and it took me 45 minutes to get to work in the morning. So, now, I joke, rush hours when there's 3 cars at the stoplight, right? So here in town. So we made the decision to move back here in 2004, like I said earlier, and opened my office across the street, and then in 2009 purchased my current office.
Got it. So right after kind of an interesting time in the financial world there.
Yeah, and one of the things that I always say is that there's always opportunity, right? And there was an opportunity for me to acquire a piece of real estate. I don't want to call it a distressed sale, but certainly there were some folks that were looking to liquidate things, and so I was able to pick up a little small office, and it's worked out well. So, and Ameriprise, you mentioned Ameriprise. We were spun off. American Express spun Ameriprise off as its own independent public company in 2005, and that's when we changed the name.
Okay. So with the financial advisor role, you're assisting managing people's money. What does that look like on a day-to-day basis? I mean, is it everything? People come to you and say, "Hey, this is my whole portfolio." Do you have any niche, elements to what you do?
Yeah, I think obviously being in this area with a lot of retirees, most of my clients are in retirement and working on retirement income strategies. But I have clients that are kind of just starting out professionals. I have folks our age, clients, children of clients that are in college now that are actually saving on a portion of their college or their portion of their summer job or what have you. So a very broad range, but day to day, the number one thing that I do is help clients make good decisions that will lead them in the direction they need to go to achieve their goals. And that is different for everybody, right? I mean, everybody wants, retirement or college for their kids or, things like that. But there are often very specific requests or needs or desires that clients have. And so it's not a one size fits all approach. There are, everybody's unique and have their own unique goals and desires. And so my advice is based on what we refer to as goal-based advice, and working with them to achieve what they're trying to achieve.
Right. So with goal-based advice, that's getting to a goal, by a certain time, and hitting a certain number possibly, but I guess that sometimes is maybe a little bit more long-term approach. Is that?
It is. For most folks, if 40 years old, you're thinking about retirement, that's, typically at least 20 years away, sometimes 25, 30 years away. You never know. But it is. It's an ongoing. I have clients still that were some of my clients I acquired in my very first year. And so those are long-term relationships. And I mean, it's 20-some plus years, 25 years. And it's interesting to see the evolution of their lives and their financial lives, and how they went from, we just had kids and we wanted to send them to college, to seeing a photo of their kid graduate college and now planning on retiring and making sure that all of their ducks are in a row and that they can do what they want to do and retire where they want to retire. And it's sometimes challenging, but it's also very rewarding.
Right. And I imagine it's definitely tailored service. It's tailored to what their goals are, where they're at in life. And, I'm just thinking about our clientele, thinking about people that may be hearing this and thinking about what you do and how it could affect them. But I mean, obviously somebody who's doing it younger in life, like that college person you talked about, might have a different strategy than somebody who's, decided to wait a little bit longer to invest.
Certainly. And, the time until funds are needed, investment time frame, obviously is one of the major items to consider when making recommendations and constructing an investment portfolio in terms of the overall asset allocation and level of risk that we're taking and that type of thing. And you're right. I encourage my kids to, they both work in the summer, and I basically made them open Roth IRAs a couple years ago and forced them to put money into it even when they don't want to, because the amount of time that you are invested exponentially makes it easier to achieve very good investment results and build a nest egg. And if somebody that starts when they're 15 years old has a tremendous advantage, even if you're just saving a couple $1,000s a year, tremendous advantage over somebody who's waiting until they're 25 or 30 or 35 when they feel like they can really afford to save. So yeah, it's but you are correct. The longer the time frame, the more aggressive we can be.
Right.
And it's similar, in your business, right? Mm-hmm. I mean, you've got limits. Clients have limits on what they can afford, but whether it be the credit score or the money they have available for a down payment, or their income and their debt to income ratios, right? You've got to custom tailor your. You're not going to take somebody to see a $1 million waterfront house if they can't afford it, right? I mean, and their needs are they. Do they have a family? Are they expanding their family? Do they need an extra bedroom? Do they want no spare bedrooms because they don't want guests coming every weekend from out of town or what have you? So it's goal-based advice and client-centered. I think is a good way of describing it.
I think that's why we love talking to you, because that's it, right in line with what we're trying to accomplish. I mean, the first questions that I ask and I try to teach our agents to ask is tell me a little bit more about what you want to accomplish, and we're really finding out what the needs are of that client and then reverse engineering that
exactly to
try to align up with their goals.
Begin with the end in mind.
Right. So with that said, and this is I think pretty key too. I mean, there's going to be volatility along the way. So there's all kinds of different personalities. Myself, sometimes I'm a little too knee-jerky where I get nervous. I see headlines. I mean, headlines do more to terrify than to clarify. So it's like somebody's got to talk me off the ledge sometimes. But, in a volatile market, when you have that end in mind, it's good to keep going back to that, I would imagine.
It is. And, timely. Today is May 23rd, right? So we've got... 2022 was a horrible year, basically across the board from an investment standpoint for a number of reasons. We've got some uncertainty as it relates to the debt ceiling and discussions that are going on, negotiations that are going on, whether or not the Federal Reserve has reached peak rates or if they're going to continue to raise rates. And so this is now, if we go back to January of last year, we're 16, 17 months into this kind of, the market's up so far this year. Okay. So that's a good thing, but it still feels like it, for a lot of people, still feels like it's down because they may still be well below where they were January of 22. The timeliness of this discussion as it relates to volatility, there are still obviously unanswered questions, the debt ceiling debate that's going on in negotiations, and whether or not what's going on with the interest rate environment and the Federal Reserve raising rates causes a lot of, for some folks it does cause some anxiety and some concerns. And so we have those conversations, right? When we talk about, keeping your eye on long-term investment results. Interestingly enough, if you look back just from a timing standpoint, for investors that are able to continue to save on an ongoing basis, if you go back and investors that were putting money to work in the middle of 2020, shortly after COVID hit, and we had that big dip in the spring of 20, those returns are actually still fairly good over the last 3 years, despite what happened last year.
Yeah, it's amazing.
For people that put money to work in the middle of last year, particularly in big, well-known, kind of growth company types of investments, they're positive over the last year. So trying to, during times of volatility, we have this conversation often, which is try to look beyond this and know that sometimes this turmoil might create opportunities. Yeah. And if you are an investor that doesn't need your funds for 10 or 15 or 20 years, this is something that you obviously just need to kind of let some time pass and get through this period of uncertainty. And it will be bumpy. We're going to have some volatility, I think, certainly for the next few months, perhaps the rest of this year. We'll see how it plays out.
That's your thought might be it's 6 to 8 months, 10 months.
Yeah, that's the most difficult. It's impossible. My crystal ball broke years ago, and I haven't been able to find anybody to fix it. But it's trying to predict exactly what's happening in the markets in a short term, over the short term, is almost impossible. But the opposite of that is also true. If you have a long-term time horizon and you know that, hey, I have, this is my retirement money. I don't need this for, 15 or 20 years. And to some extent, even if you're retired and you're taking an active distribution, you still need to have some assets that will last, that to provide some growth, to provide additional income for you down the line. We have clients that are, I talked with 2 clients today and their daughter, one's 90, one's 88, right? This is more and more common that folks are living well into their 80s and into their 90s, and retirement periods today are 25 or 30 years, and we have to plan for that, as opposed to, even when I was starting, we were talking about planning for 15 or 20 year retirement timeframes. So always need to have some allocation, in my opinion, to long-term growth, and understand that over time, over multiple market cycles, the chance of achieving positive investment results are quite high,
right?
Despite the short-term volatility. That's unfortunately part of the game, right?
Yeah. Just have to have a stomach for it.
That's right.
Just don't watch it. Just look at the eye on the prize, right? Laser focused on the future.
Right. And it's interesting, when back in 2008 and 2009 during the financial crisis and the big decline in the market, then we also had a big decline in real estate prices, right? And this is a period of time where we have a big decline in some sectors of the stock market, but we also had a big decline in the bond market last year. But real estate has stayed quite strong. Right. So for a lot of folks, real estate is one of their larger, if not their largest asset. And the value of that changes every day too. It's just not on. You just can't hit a button on the computer and pull it up to see how much did it go up today or how much did it go down today. Right. And but it is that's one of the reasons why I try to suggest to people, if you don't have the stomach for it, so to speak, maybe you don't want to look every day. Maybe you want to look once a month or once a quarter at what's going on. And if you're actively saving, this is opportunity, right? When the market's down, you're buying more shares. If you put $100 a month in, or $200 a month, or $1,000 a month, whatever it is that you're saving, if the market's down 10%, you're buying 10% more shares than you did a year ago.
Right.
And so when the ultimate recovery comes, you're going to be better off for it.
Yeah. So you touched on it, and this is where, as a real estate broker and a financial advisor, sometimes, we not that we fight with things, but I get clients that come in sometimes and say, my financial advisor said, what, I should hold off. I'm not saying this is you. I'm just saying I hear this coming from clients. So I don't necessarily, knowing you for some time, I have a feeling that you do believe that there is a place for real estate in a portfolio of somebody's financial investment goals. What are your thoughts on that right now? Is there a magic allocation? Is there, do you think you're always looking for opportunities? Is that the advice?
Well, there's different ways of having exposure to real estate, right? So one is your primary residence, okay, right. And that's for a lot of folks. Let me rephrase that. For some folks, consider that to be an investment, right? Because they think at some point I'm going to sell it down the road and I'll downsize, or I'll move to something cheaper, and I'm going to have some appreciation over that time frame, and therefore it's an investment. Other folks just look at it and say, this is where I'm living, so I don't really consider it to be an investment. So that's one way of getting exposure, is obviously your primary household and residence. Other ways of doing it are actually physically owning rental properties, which we don't really advise on. There's some restrictions on advising on real estate, but particularly for somebody that's in a relatively high tax bracket, or has the time and the ability to handle the management of it, or is okay outsourcing that. As long as you get the right tenant, right, then rental real estate can pay off in the long run. But there's also ways of investing in real estate that is not directly owning physical properties, and that's through real estate investment trusts. And there are several that are publicly traded. A lot of them have specific, some are apartments, or some are hotel based, or some are shopping mall based, or there's different types. So there is a variety of ways of doing it. As far as a specific allocation percentage, or a minimum or a maximum, I don't try to. I mean, obviously you need diversification, right? I mean, so you're not going to ever want to tell somebody put all of your money in one asset class, whether that be real estate, or large cap growth stocks, or government bonds. You want to have a diverse portfolio. So, going back to that goal-based advice and the individual needs of investors, it comes down to what, how does real estate fit into their overall situation in terms of their abilities to manage it, or outsource it? Do they have the reserves to cover expenses that are associated with it, et cetera? But it can be certainly, obviously, very lucrative. I'm curious, who you mentioned some folks are saying their financial advisor said not hold off on real estate. Is that buying?
We hear it in both sides.
Okay.
Right. So it's not uncommon where I'll get a client that comes in and, they've got a great relationship with a financial advisor, and for whatever reason, they might want to move forward on purchasing, but sometimes they say, all right, well, maybe now is not quite the time. You need to stay invested for, ride it out for a little bit longer and then try to pull the trigger. And obviously I don't know these folks, and my goal is to help the client achieve their goals, and people buy at the beach for different reasons. Sometimes It's a lifestyle change. Sometimes it is for investment purposes. So we always have to figure that piece out. But I just had a conversation with one of our agents today, and they have a client they've been working with for quite some time, and the financial advisor is like, you should just keep everything in the market for the next 4 or 5 months, and then see where you're at towards the end of the year. So
that sounds to me like somebody's trying to predict what's going to happen in the next 4 or 5 months. I think it's quite difficult.
That's tough, right?
Well, and particularly, in this. And again, I'm not a real estate professional, and we don't give real estate advice.
Right.
But inventory is down, as you well know, and so personally, my wife and I were interested in purchasing a piece of property, a building lot in a specific area, specific community a couple years ago, and when one came available at a very reasonable price, I think, certainly for the size of the lot and the location, we jumped on it right away, because having looked at others and following others, you know that they're just, you know, the best deals go quickest.
Right.
And so if a client were to say to me, you know, we want to, and this happens all the time, you know, we want to buy a condo in Florida, or we want to, you know, buy a beach house, you know, whatever it might be. If they can afford all the components that go along with it, right? Obviously not just the payment, but if they've got the resources to cover the other expenses and the repairs and have a sufficient reserve, I try to work with them to figure out the best way of making it happen.
Right.
You know, and finding, looking at where they can accumulate or from which assets they have that we can pull from in the most tax efficient manner to come up with the down payment that they might need or what have you. So I try to stay away from saying, I had a conversation with a client today. She said, I'm going to need some money. You know, is it going to be better? Should I sell it? Should I take it now, or should I take it in 2 months? You know, and it's like, okay, you know, I don't know, flip a coin. You know, you tell me what's going to happen in 2 months. If you can, you're a better man than I am.
Right. Right. And I wish I could give that same advice in real estate.
Right.
You know, it's just like you said, you're a better man. You can't say with confidence, but. So what I think of in this comes from some of the people I have followed and have been mentors to me. They are not, their total wealth was not created just in one spot. It was
Correct.
Diversification. You know, getting a great plan, whether it be in stocks, bonds, that piece, but then also peppering in the real estate. And at the end of the scheme of things, or the grand scheme of things, it works out to have a good balanced attack.
It does. And you know, some of my most successful clients are just that. They tend to be involved in different industries or different ways of building their wealth. Obviously, publicly traded securities, also known as the stock market, is one way, and that is a long-term, consistent, save on a regular basis. And generally speaking, things tend to work out. But they often have interest elsewhere, and real estate a lot of times is part of that.
Right. So another interesting thing here, switching gears again, from a real estate standpoint, you've got pretty strong roots in the greater Ocean City area. Maybe touch on that a little bit.
Sure. So I think I mentioned that my family moved to Ocean City. I was in third grade at Ocean City Elementary School, and my father was a builder. So he worked before we moved here, he worked for a company called National Homes Corporation, which I don't really know a whole lot about because I was so young, but I think that they sold modular homes. And he had moved a couple times in the Midwest, and he saw what was going on in Ocean City. Having been born and raised in Baltimore, he was obviously familiar with Ocean City, and so knowing the growth that was going on in the in Ocean City at the time, decided to relocate and start his own company. And my grandparents owned a lot on Fountain Road in Cane Woods in Ocean City, and my father built a model home. And it was, I'm just going to take a guess, and probably, it was 3 bedrooms, 2 bathrooms, maybe 1,800 square feet, something like that. And I think he sold that model, was when he first built it, was listed for sale for $68,000. Nice. So that's going back a ways. But yeah, he was a builder, primarily single family residential real estate, and then got involved in some multifamily townhouse projects. So if you are in Cane Woods and you have a stick-built home that was built in the 80s, there's a pretty good chance that he built it. After that, he got involved in some bigger projects and general contracting, some condos and things like that. But he did that for, up until he died in 2009. So 25 years.
Yeah. And I can attest to it. I own one of his townhomes. My wife and I purchased one of his townhomes, not new, but on the resale end here a couple of years ago. Didn't realize it at the time until I think you started talking. You're like, where did he buy? Or where did you buy?
Yeah, you were sharing with me that, and I knew it was Sunset Harbor, right? Yeah. So I won't. Yep. So I can remember those being built right there on the water. I remember in fact, a good friend of mine in high school, her family bought one, and that was their home. But it was a beautiful view right there on the Fenwick Ditch, and for some reason, that's where the model home was. I guess that's kind of where he got most of his clients that wanted a custom built home on their lot, because I guess just the location, him being there. But like I said, there's a lot of modular homes up there in Cane Woods, but a lot of the stick built homes, particularly if it has tan siding, there's a good chance that he built it. So
that was his niche, right? The tan siding.
For some reason, it was quite popular then.
So did you live in Cane Woods? Did you grow up in Cane Woods?
So when we first moved to Ocean City, we lived on 32nd Street.
Okay.
And then my parents built a house in Cane Woods at the end of Holly Lane. In 1983, something like that, 1984, and that's where I grew up. Yep. Yeah. And that's, there were still deer and trees and rabbits in Cane Woods at the time. Now it's all houses, right? But it was a wooded area. That's hence the name Cane Woods.
Yeah. So, and then you went to obviously Ocean City Elementary, and then out to Worcester. So, what was that drive like? I mean, that's a bit of a stretch from Cane Woods, about as far north as you can be in Ocean City, out here to Berlin.
There was it was a good bit of a ride. My sister was 4 years older than me, so when she got her license, she would drive, and but there was a bus that started, at 142nd Street or whatever, and went down the highway, and we would zip into Mallard Island and pick some kids up, and then the drive down Route 50. And so it was, we always budgeted a half hour or something like that, and it's gave me plenty of time to get my homework done in the morning.
Right. maybe that's what I'm missing with my kids. Right? I need that bus ride.
Too close to school. They don't have time to get their homework done in the morning.
So you went to Worcester, and fast forward to today, you are still extremely involved here with Worcester Prep and the Alumni Association. Is that correct?
I am. Yeah. So my kids go to Worcester and started there in pre-K. And my wife works there. You mentioned that earlier. So about 11 years ago, I was approached by Steve Green, who was a couple years younger than me, but we played sports together, and I remember him obviously from high school, about kind of getting the Alumni Association revamped and get it going again. And so I agreed, and Steve just stepped down as the president last year and asked me to take over. So this is my first year as the president of the Alumni Association. We've done quite a bit, I think, in the last 10 years in terms of getting it back up and running. One of the things that we started about 3 or 4 years ago was an Alumni Giving Day, where we would encourage fundraising from alumni on one specific day. We've expanded it to just call it Worcester Giving Day. It was just held last 2 Fridays ago, and we raised over $25,000 in 24 hours. So obviously education needs funding, and we were happy to be part of that fundraising for the school, and look forward to continuing it.
Yeah, that's awesome. It's been a great experience for us with Harper being over there at Worcester, and great for the community here. That people come to from afar too. It's not just here in Berlin, in Ocean City.
Yeah, it's a very good school, and I tell people all the time that Worcester County has tremendous educational opportunities, whether it's Worcester Prep or MBS or Seaside Christian or through the public school system. Worcester County public schools are fascinating. They're amazing. Right? They're one of the best school systems in the state. I think Lou Taylor and his whole crew do a great job, and so it's nice to have to some extent the choice,
Right.
and have the options. You mentioned people coming from afar. There aren't a lot of dedicated college prep schools, which is obviously what Worcester is. So they do draw students, as you probably know, from Delaware, Sussex County, and also Wycomico County and Accomack County in Virginia. I think there's a couple kids from as far south as Onancock. You talk about a drive.
Right,
That's a solid hour each way. So that's a pretty big sacrifice. But for whatever reason, their families are willing to do it, and it's nice to have that. Obviously, the enrollment for to have the school's twice the size when I was there,
Right.
and it was basically a cinder block building, no air conditioning. I joke that I was the first class to graduate in air conditioning, and that was 1990 because they built that the Athletic and Performing Arts Center. That was the first year that we had graduation in an air conditioned building.
Got it. Well, I mean, it's come a long way, obviously. I think you're absolutely right when you talk about options here in Worcester County that our residents have. Final thing I wanted to touch on, if you're okay with it, is you've obviously been giving back. You help with Worcester Prep, but you've also been very active with Atlantic General Hospital.
It's true.
And, Atlantic General is a huge resource for us. Obviously, in the summertime, it's serving us just locally, but then, it comes summer and we've got 300,000 people in the greater Ocean City area. It's got a huge role, and you've been a big part of that.
Well, I indirectly, I guess, but so I've been involved with the hospital as a member of the AGH Foundation for probably 15 years or so, and I was asked several years. We had some friends over for dinner one evening, and he asked me to join, and I did, and so. I started as a general foundation member, then I became part of the board of directors. And I guess about 7 or 8 years ago, the board asked me to join the investment committee, which is actually part of the finance committee. But I was able to join that and actually chaired the investment committee for the hospital for about 6 or 7 years. I'm the vice chair now, but I've also been asked to join the finance committee, which I've been on for about a year and a half or so. And the foundation primarily is the fundraising arm for the hospital, but you touched on something about the value of the hospital for the community. So growing up on North Ocean City, I did take a drive to the emergency room in Salisbury. That's a long drive,
right.
And doctor's appointments. I can remember, my mother, the first time she had breast cancer, all of the treatments were in Salisbury, and that's a long ride for people that are either chronically ill or have some significant illness to have to drive 35 or 45 minutes to get to a hospital it's just too far. So AGH is a community hospital. They do a great job, and I'm very happy to have been supporting it to a small degree, but also volunteering as part of the investment committee, finance committee, and foundation for the last 14, 15 years.
Yeah. That's
and it's the second. It's the largest non-government employer in Worcester County. We talk about I think their payroll is something like $67 million a year, and those are residents of primarily Worcester County. Certainly a couple maybe up in Sussex or Wycomico, but the overall majority is Worcester County residents. They own property here, they live here, they pay taxes here, they contribute to the community in other ways. I mean, being healthcare providers is tremendous, but they also contribute in other ways as well, and so it's really one of the anchors of Worcester County, certainly northern Worcester County.
Absolutely. Huge resource for us to have here, and a huge contributor to the overall economy.
Yes.
Which is what we need here in Worcester County.
And to tie it into your real estate business, okay, retirees,
right?
People that move, or even moving with your family, you want to know that healthcare is nearby, right? And so, I know plenty of people that I've talked to that said, yeah, we moved to Ocean City, or we moved to Ocean Pines, or we moved to Berlin or South Point or whatever it is, because we want to be closer to AGH. They had looked at maybe like a Shincoteague, okay, or another area that's, offers, kind of the coastal amenities, but lacks a physical hospital and the healthcare infrastructure that supports. And that was a big part of their decision to move here as opposed to somewhere else. And so, just another reason why healthcare and education are the two fundamental needs for any community, and we've got very good systems for both.
Right, huge for the community, but also huge just in conversation with real estate. I see it all the time. I mean, we living close to 113, seeing the ambulances come from the north, in Delaware, where they don't have the community hospital.
Yeah, Selbyville and Roxana, and that certainly southwestern, south central Sussex County. That's a long ride to Lewis, right, or over to Seaford, and so having that community hospital down here in Berlin is helpful for those folks as well.
Right. Well, I really appreciate it, Chris.
Yeah.
Anything else we can touch on with regard to the financial business and how they could maybe contact you if they?
I'm not here to kind of toot my own horn or whatever, but I'm pretty visible online.
Right.
Ameriprise Financial, Berlin, Maryland is pretty easy to find. But and I appreciate you having me, and congratulations again on this space. It's a really neat. I really like what you did with it. You explained to me what you were trying to do, and I just happened to know, the landlord, so to speak, and was able to get you guys in touch. So. Congratulations and for you and Christy as you're growing your company as well.
We really appreciate the support, bird dogging for us and getting us in here, which is not easy in Berlin, not easy to get on Main Street. So
it is definitely not. I mean, it's a high value area, widely a lot of demand, and just down the road there's a lot of renovations going on just one block up, and so it'll be interesting to see what new businesses come into town. I guess maybe later this summer when they open up.
Yeah, no, it's exciting times here in Berlin, and it's like you said, it's changed so much even from when we first came. I remember like those first Arts Night, which is now Ice Night, and the Christmas tree. Right. It was like Arts Night back in the day, and just nowhere near what it is now.
And even my before we were married, my wife Jennifer had an apartment on Main Street. And this was, back when they were filming, Runaway Bride and all that. The hotel had just been, I guess, had been renovated a couple years prior to that. But just in the last, since we've been back, which is almost 20 years, the growth has been tremendous. And I think that the town and the chamber and the economic development team, all of those folks do a really nice job of there's almost every weekend during the warm weather, right? There's an activity downtown or something going on. So you're lucky to get the space.
Right, we're lucky. Everybody wants an excuse to have a drink on the streets in a public street. So that's why everybody comes to Berlin. That's really what they like.
That's true.
Well, thank you, Chris. I appreciate it, and thanks to our listeners here. I think one of the things, Chris is very humble, but I mean, obviously we have a lot of people who come from out of the area and they're relocating here, whether it be retirees or they're just impressed with what it's like to live here. And they could be leaving their doctors back home, but they could also be leaving their financial people back home. So wanted to have Chris on here as maybe another option. So.
Well, I appreciate that, Ryan. I appreciate your support, and certainly thanks for having me on today.
Yep. No, thank you. Thanks for being a great friend, neighbor. And
we didn't, I don't know, did we say that we're neighbors? Kind of neighbors.
Yeah.
Kind of behind the across the street neighbors, right? So the next block over. But,
right. We'll put it this way. When the house was for sale and we were thinking about it, we called Chris because we wanted to know all the dirt, what was really going on there. So
it's been great to have the kids grow up together and run around and have the Halloween parties and all that kind of stuff. So it's been fun.
Yeah. Thank you.
Sure.
All right. Thanks to our listeners. Thanks for tuning in. Until next time, we'll see you back here on the Running Real Estate Podcast. Thanks again.